guys, welcome back to the channel. On today's video, I want to talk about a stock that I just bought personally myself, a stock that I think is in a great buying range right now. It's of a great value. It's Restaurant Brands International. Some of you may not have heard of this company before, but I promise you, you've heard of the fast serve restaurant chains that they own. The ticker is QSR on the New York Stock Exchange and QSR.TO on the Canadian side. Restaurant Brands International is the parent company of Tim Hortons, Burger King, and Popeyes. You've all eaten here, or you've seen the signs at least. Now, Tim Hortons in particular has been extremely popular throughout my lifetime. They're absolutely everywhere, especially in major urban city centers and malls. Their coffee and donuts are so popular. Every time I drive by these restaurants, there's such a lineup in the drive-thru. Personally, it makes me wonder why people want the coffee and donuts that badly to wait 5-10 minutes in a drive-thru line. I think it's nuts, but that's the dedication and the loyalty people have to this brand. Now, if Tim Hortons was only in Canada, I would really think twice about investing in it. However, they've made moves recently to enter the American market and, more excitedly, China. Now, Burger King is pretty worldwide. I'd say it's probably the second best burger chain, or second most well-known burger chain outside of McDonald's. It's pretty good. They've been going through some rebranding lately, which I like. They've got a lot of vegetarian options now. Not a lot, but they have them, which is kind of exciting for that demographic. It's kind of the new age is what people want, the Beyond Meat. Tim Hortons has been doing it too, so I'll give them a little bit of a shout out. Now, the real crown jewel of this Restaurant Brands International is actually Popeyes. Their Louisiana-style chicken is making a ton of money for them. They bought it a little while back, and it's just the growth factors are great on Popeyes. Going forward, the Tim Hortons expansion into America and China is going to be a big growth factor. Second, maybe, to Popeyes. Popeyes is killing it, and honestly, if you've had their food, it's pretty good for what it is. It's a lot better than KFC, and I know that I'm using a little bit of anecdotal evidence right now. I'm not talking about dollars and cents, but that matters. That matters. You drive by these restaurants and you see them packed. That's a good sign, and that matters, guys. The forward yield right now is 3.49%, so that's pretty healthy, and I like it. Okay, that's good enough to be in my portfolio. And like I said in the beginning of the video, guys, I just started a position. Now, the current stock price is $76. I've been watching this one for a while. It's been in my watch list, and I kind of wanted to initiate a position around the $80 mark. And I did. It dropped to $79.50, and boom, I bought in $1,500 worth, so not a huge position. I just want to test the waters a little bit, and we're going to go over their financial statements quickly, and we'll see why this is a decent one to hold for the future. We're going to look at their most recent statements here. They've got another one coming out on October 25th, but we're just doing this video before then, so we're not going to have the latest numbers. However, if we look at their total revenue back to 2017, we're going to see the type of increase that I like to see in companies that I invest in. 4.7 next year, 5.3 the next year, 5.6. This is beautiful. This is a slow upward trend, because the Tim Hortons brand is pretty mature, but like I said, we're getting into other markets. We're going to go up higher and higher a little bit. Burger King is pretty mature, but our biggest growth factor, Popeyes, is coming, okay? Popeyes is making a lot of new stores, and that's what's going to really increase the bottom line. Now, if you look at 2020, guys, we all know it's a down year. We can just throw this out, to be honest with you, because we're on the come up right now. We've gone over the worst quarters. It's only going to get better from here. If you look at this here, TTM, that stands for trailing 12 months, okay? So this 5.3, if you compare it to 2019 at the 5.6, we're getting back there, and we're going to go even higher, okay? So we're trending in the right direction. Take 2020 and just throw it in the garbage, guys. We're not going to compare anything. We're not going to compare 2021 to 2020 even, because then it's going to look like we just blew expectations out of the water, and it's huge, okay? So just throw this year out. Now, we also want to look at the number of diluted shares that have been outstanding since 2017 to present day. And if you see here, 477, 473, 469, 468. Okay, so this is a decrease, and this is what we want to see. We want to see the outstanding shares lessen until, you know, we get to a lower number. That means the company is buying back a lot of their shares, and they actually announced that they are going to be purchasing a lot in the next 2 years. If we look at their quarterly report from 2021, the CEO is saying that they are going to authorize share buyback up to $1 billion over the next 2 years. So this is going to be pretty good on the share value because the more that they buy back, the higher the share price goes. This is good for a shorter term investor. If they don't continue this model over time, it doesn't really matter. Myself, I'm a long-term dividend investor and I want to see the dividends increase over time as well as the share appreciation. Now, like I said, you can even buy this stock cheaper than I bought it, but I thought it was a great opportunity right now, so I picked some up. I like this for my portfolio because I don't have a lot of consumer discretionary, and now I do, okay? So every time I walk by someone at a mall or a bus stop and they're drinking Tim Hortons or eating some Popeyes wings, I'm going to feel good. I'm going to feel like they're putting money into my pocket, and I like that kind of thing. If I take my wife out to eat and she wants to go to one of these places, which I doubt she does, I would feel good about it because I'm just putting money back in my pocket, and I like that type of thing. It makes me feel good, guys. You know, every time I pay a cell phone bill and I own the telecommunication company, I just feel like I'm paying myself because I'm going to get that money back, and that's the type of thing that makes me happy. And I like owning everything that I spend. Anywhere I spend money, I like to own that, okay? So this is a good value play going forward. You know, guys, it's not all rosy and peachy with this company. I mean, there's headwinds that they have to face. They face fierce competition, but I do have a belief in the management. And I like these companies going forward. That's why I bought in. Let me know if you guys are watching the stock, if you bought in, if you hate it, if I missed something. You know, one other thing I didn't talk about is the price to earnings ratio. If we look here, this 27, this seems high, but it really isn't if you compare it within the sector that it's in. If you look at Starbucks, for example, the price to earnings over 100, and you might argue that that's a better coffee chain, and I'd be inclined to agree with you. I like their coffee better, but this is indicative of the value that we're seeing here in Tim Hortons. Okay, guys, it's a good buying opportunity. If you enjoyed the content today, give me a like, a subscribe, a comment. We'll see you in the next video, guys. Take care.